Hello everyone, welcome to this new supply and demand weekly analysis for the 25th January 2021. This is the trading disclaimer. You can pause the video and read it at any time. Okay, let's start with the dollar index. We have, monthly and weekly area of demand in control, strong area, going short in smaller time frames is not allowed. That's why we saw that for our area of supply eliminated. We had a new area of demand over there, but the bullish impulse here was very poor. Last bearish impulse on the weekly was, did not consolidate away, was not strong. This price action on the weekly is really poor. Bullish and bearish impulses are not able to consolidate away. So, as per the rules, we've got the monthly area of demand in control, weekly area of demand in control, longs if new strong areas of demand are created. We had one area over there on a daily, but no retracement happened. On the euro dollar, we have the same scenario but upside down with the monthly area of supply in control, and a new area of supply was created over there, but no retracement. Price has retraced to this poor area of demand. Why poor? Because it's only made of one ERC and it didn't even create a 2-to-1 imbalance. So in order to have a 2-to-1 imbalance, if we duplicate the imbalance, price would have had to reach that price area. And it didn't. It fell short of it by quite a few points. So right now, doing nothing on this one. On the Aussie dollar, we have the monthly uptrend, longs will be possible again, and the monthly area of demand, weekly uptrend, daily weekly demand area over there, but it's not scoring high. Why? Well, not a 2-to-1 imbalance. If I duplicate the imbalance, as you can see, it's not a 2-to-1 imbalance. It should have reached that area over there. So it's not set and forget type of level. That one, for example, here would have been great. Why? Because we have like almost 3-to-1 imbalance. Longs require confirmation, and if you look within here, here at this daily area demand, it is also poor, one ERC and all that. This one over there more aggressively was trying to play out. Right now we have two peaks, one over there, one over there. If price continues to rally, we might see another area of demand created over there. But right now we have a tested area of demand. Expected bigger penetration happened, and that's why I am allowed to draw the bearish trend line. Price could drop much farther or to that area of demand on the weekly, and from there create new areas of demand where longs will be possible. On the Aussie CAD, monthly uptrend, weekly uptrend, longs will be possible down there. Bullish price action here is not very strong. No set and forget possible, the daily out of alignment. So if the month is in an uptrend, up, weekly is in an uptrend, and the daily is out of alignment, then it means that we need bullish confluences on the weekly or the monthly or weekly areas of demand in order to set and forget. This daily area of supply is very poor, not a single ERC as departure. So it could continue to rally over there and create a new area of demand on the daily. On the Aussie yen, we have the monthly area of supply, week area of supply tested, expected bigger penetration, which is happening already. We have like price went up like 21 pips, 0.26%. So we have a monthly uptrend, weekly demand zones, the daily area of demand is in control, longs if new areas of demand are created. If the daily is out of alignment, we need weekly imbalances for longs. Aussie Kiwi, monthly area of demand is in control. No retracement to this daily area of demand. Now we've got here a weekly impulse, did not consolidate away, responsible for eliminating the weekly area of supply. We've been talking about the elimination of this area of supply since price was down there at the monthly. Why? Because we have a monthly area of demand and it's scoring high. And then when price reach this area here, like here, if you pay attention to the cross here on the monthly, you're going to see where the bullish engulfing pattern was. And we were expecting that area to be eliminated, and that happened. It is a pity that we didn't have 2 ERCs and all that on the weekly in order to go along over there. But as you can see, price action here on the daily, this is what we have within this weekly bullish impulse, and that's very poor. So we need new areas of demand in order to go long. On the CAD yen, we have the monthly area of supply almost in control, weak price action because it was tested on departure, weekly bullish bias, longs and nears of demand, but this daily area of demand is not scoring high. Why? Because it's only made of a single ERC, and it didn't accomplish, well, not 2-to-1 for sure. This one did, and that one retraced to it and reacted quite strongly. So even though we have the daily uptrend, we need new areas of demand because of that fact and being too high. Aggressive trading are possible, but we need strong areas of demand no matter what. And this one is not strong. On the Euro Aussie, the month is in a downtrend, the weekly is in a downtrend, and now we've got a weekly bullish engulfing pattern, expecting price to rally much higher. So these last bearish impulse we've got here, overextension, was not able to consolidate away. So going short anything within here was not allowed. The 4-hour right now is in an uptrend. Daily out of alignment, short could be possible up there. It will depend on how price rallies over there. So potential counter-trend longs. On the EuroCAD, as expected and mentioned last week, we've had this area of demand eliminated because the weekly area of demand within which it was nested didn't score high. Now it has reached this stronger area of demand, nothing to do with this. If we compare this imbalance with this one, I mean, this one clearly wins by far. 3 ERCs 2-to-1, this one only 1 ERC and not 2-to-1. So now the weekly area is in control, no shorts are allowed. So this area of supply was eliminated, even though it was responsible for eliminating that area of demand. So as you can see here, the bearish impulse was only made of a single ERC candle. And, one sec, if we clone it, it didn't accomplish a 2-to-1 imbalance. So, a 2-to-1 imbalance, in order to have a 2-to-1 imbalance, price should have reached that area, that price level. And as you can see, it didn't. So 1 ERC, not 2-to-1, weekly area of demand in control. What else? I mean, so if you are trying to go short here on the 4-hour, it would have been a loss. But you could be breaking several rules. One of them, 4-hour area supply against a weekly area of demand being in control. 4-hour area supply nested within a daily bearish impulse or supply that was not strong enough. It didn't create a 2-to-1 imbalance and only 1 ERC. So whatever we have in the smaller time frames are negated because they are nested within a bigger time frame imbalance that did not score high. That's another one of the rules. So you could be breaking several rules if you were thinking of going short over there. On the euro pound, we have the monthly bearish price action. No longs are allowed, but also no shorts are allowed. I mean, this is what happens when price is consolidating. So we have this price action here. It's very difficult to trade, okay? Because right now we've got a weekly average supply, bearish impulse that did manage to eliminate that area of demand on the weekly with this bearish pink candles, cross of resistance, dropping further. We still have these bullish engulfing pattern. We might create new strong areas of demand, but a weekly is in a downtrend. But again, weekly area supply is not scoring high. I mean, it doesn't even reach at 1-to-1 imbalance. What happened to the EuroCAD weekly area demand? Eliminated 1-to-1, and I have already shown several examples, this one as well, and many others in the previous cross pairs. So this one's tricky as well, many tricky scenarios right now. On the Euro Yen, we've got a monthly in an uptrend, weekly in an uptrend. This impulse here, price is at balance. was not able to consolidate away, longs will be possible again. A weekly area demand because the daily is out of alignment. Monthly up, weekly up, daily out of alignment. Longs at weekly area of demand. Or new areas of demand or high time frame imbalance or confluences. Probably we might have 20 EMA over there. Where is it? There it is. For confluence. For longs. On the Euro NOK, we've got the monthly area demand was tested, bigger penetration expected, it happened, but we still have the monthly area of demand in control. A low in the 3 months range that could be drawn as well, like that as well. So shorts are not allowed, even though we have a weekly downtrend. We've got a weekly area of supply, but again, if we score the imbalance here, okay, we've got only duplicate this level. That's 1-to-1 reward risk, and in order to have 2-to-1, we would need price to have reached that price level, and that hasn't happened, obviously. So we are not allowed to set and forget shorts on this one. Potential longs if new strong areas of demand are created. We already have the bullish engulfing pattern, so if we get another ESC there, that could be nice. Euro Kiwi monthly average demand is in control. Longs and new areas of demand on the daily. New average demand over there on the daily. Almost no consolidation away. Okay, it will depend on the broker, but it doesn't really matter because even though it might or not have consolidated away. Why isn't this moving, my friend? Okay, it only made 1.1 probably reward risk. It only reached, it didn't make a 2-to-1 imbalance. We would have required price to reach that price level, and it didn't. So if we start getting engulfing patterns over there, 1 ERC and all that, that's great for longs. But right now, we do not have any high probability imbalance to go long at. On the pound dollar, we have the monthlies in an uptrend, the weeklies in an uptrend, weekly demand zone is in control, daily demand zones are being created and respected, longs if new demand zones are created. Pound Aussie, we have the monthly in a downtrend, but we have this weekly area of demand that has again control. It's been tested once, twice, third time, fourth time, used up. We need an uptrend in order to go long, and we want that daily area of supply out of the way. Daily out of alignment, we need new strong areas of demand in order to go long against the monthly downtrend. Pound CAD, well, it's been doing nothing for almost a year. Price has been ranging in this range box over here, classic support, classic resistance, pink candles over there, no close underneath, and then we've got bearish engulfing patterns, bullish engulfing patterns, bullish engulfing patterns, bearish engulfing patterns. So it's like price is just doing like this, bouncing up and down like that, back and forth. So right now, if anything, right now, longs aggressively, it's getting closer to this area. We've got a new area of demand on the 4 hour, but still have that daily area of supply in control. On the pound yen, expecting that monthly area of supply to be penetrated even further, expecting that weekly area of supply to be eliminated. Longs aggressively, but we need supply zones eliminated. Nothing happened yet. Pound Kiwi, we've got monthly area of demand in control, longs and areas of demand. On the daily, we've got this daily area of demand, another one over there, and another one over there. If you are long on this one, manage your trade aggressively. Or if you have your stop loss over there, move it here so you don't lose full amount of investment. It's an aggressive type of trade. Remember, we still have the trend line confluence. So it's aggressive. Kiwi dollar, We've got the monthly in an uptrend, new average demand over there, monthly losing steam. So monthly up, weekly up, daily out of alignment. Longs and weekly areas of demand, and demand is over there. This is a confluence. We need new areas of demand off this confluence in order to go long. But the 4 hour is out of alignment, new strong area of demand on the 4 hour, but now we've got new area of supply. So this is what happens when and why this is happening. Well, strong rally, and now we've got that potential doji on the monthly. Still one left, 1 week left for the monthly candle to close. So all this is happening within that candle. That's why the daily is doing like that, up and down, creating the areas of supply and all that. So after strong rally, we need a bigger retracement or super strong areas of demand in order to go long. And the daily, both the daily and the 4 hour are out of alignment. Kiwi cat, we've got a monthly in an uptrend, demand gain control, expecting that area of supply to be eliminated. We have bullishing of the patterns, but as you can see here in the weekly is still in an uptrend, but no consolidation away on this bearish impulse. Going long right now against this bearish of the pattern is suicidal. Could it work? Of course it could, but it's very complicated to trade in these circumstances with this price action. We've got an aggressive new area of demand over there on the daily, expecting the elimination of that area of supply. Kiwi yen, mounting an uptrend, demand over there for longs, losing steam on the monthly. We had a 1 ERC, basing candle. This could happen, or it could be just the basing structure before it creates another ERC. On the weekly, we have bearish engulfing pattern, bullish impulse not able to consolidate away. This is very bad price action. So we need new areas of demand in order to go long of these confluences. Monthly uptrend, weekly uptrend, daily out of alignment. So price reaches the daily area of demand and the bullish confluence, and then we wait for new areas of demand on the 4 hour, because since we have the confluence on the weekly, we need new areas of demand in the entry time frame of the weekly sequence, and the entry time frame of the weekly sequence is the 4 hour. So it eliminated that area of supply. It's impulse, 2 ERCs, more than 2 to 1. So this is an example of a new area of demand of the daily area of demand in control and bullish confluences with the weekly in an uptrend and the monthly in an uptrend. Valid trade. Dollar CAD. The monthly bearish bias, weekly downtrend, but this last bearish impulse did not consolidate away. So going short within here is not allowed as per the rules, and we've got that 4 hour area supply eliminated as expected. So right now, no longs, no shorts. We've got a 3 months area of demand in control. If we get new weekly areas of demand, for that will require at least 3 weeks more. Then that's great. That would be great for longs or new strong areas of demand daily. So we need a trend line break, 2 ERCs, and all that. Swiss franc versus the dollar. Monthly downtrend, weekly downtrend. Now look at price action. On the weekly, we have price action at balance. It's been doing nothing for 7 weeks, as you can see. Pink candle over there, bullish of the pattern. We were expecting that to happen. It didn't happen yet. The daily out of alignment, shorts and years of supply in the weekly. Weekly year supply is much higher. This is just a bearish impulse. It would have been great for counter longs if these daily average demand score high, but it's only made of 1 ERC and then basing candle ERC. So this is not a high probability type of trade. Chinese yuan versus the dollar. Very strong bearish impulse. We've got the engulfing pattern on the 3 months. For the weekly is overextended. Longs if new strong areas of demand are created. Longs higher probability even if that monthly area of demand is reached. Indian rupee versus the dollar. 20 MA is over there and the weekly area of demand. Longs at monthly area of demand over there. We have a poor area of demand that was created as a reaction to this weekly area of demand. It not enough to go long at. It was trying to play out for a couple of days and then it made a lower low. So this is not scoring high. Long's higher probability at monthly average demand. Dollar yen, we have the monthly area of demand in control. We need new areas of demand to be created. We have one area of demand over there, one ERC alone. So let's see if price continues to rally and give us a new area of demand over there. Still, the weekly is still in a downtrend. We had engulfing patterns, price broke lower, engulfing pattern, broke lower, another engulfing pattern. It could drop lower. So let's see what happens. The previous daily average demand over there was tested a couple of times and it was eliminated. All this is the weekly bullish engulfing pattern. All this is the weekly bullish engulfing pattern. This level over there was stronger than this one. And it was eliminated after a couple of retests. As again, almost all the pairs except Indian rupee and a couple more maybe are in a clear trend on the monthly. The others are consolidating, almost all of them. Norwegian krone versus the dollar. We have the monthly in a downtrend after eliminating two areas of demand. Strong bearish impulse, losing steam on the monthly. The weekly over there, here we have the trend line still holding for our, the daily price action. Very poor when near areas of supply, but this bearish impulse did not consolidate away. So again, we have impulses that are not strong enough to consolidate away. That means that lower time frame imbalances nested within are negated. So counter trend longs could start happening, but we need that one out of the way. This is a counter trend long on the 4 hour, but only 1 ERC, and the daily is not aligned for long. We need at least the daily aligned for longs, or not aligned for shorts. Singapore dollar versus dollar. This is a very similar, is the exact scenario. Same scenario as the dollar index that you will see. Monthly average demand is in control, and new average demand are being created as a reaction with the last bearish impulse not able to consolidate away. And if we take a look at dollar versus the Danish krone, we have the same scenario, okay, with the monthly average demand, weekly average demand. That's like the dollar index. They are sort of pegged. So South African rand versus the dollar. Long bias. Why? Monthly uptrend. This is one of the 2 or 3 cross pairs together with Indian rupee with a clear monthly uptrend. Clear uptrend. It reached the monthly average demand where longs would have been possible if you're using that time frame. New average demand on the weekly and new one on the daily. I didn't retrace by a couple of ticks. This is a very similar scenario to the Eurozar, which is very correlated to this one. And the only thing is that we have the euro on the left side of the ticker. On the Eurozar, we've been talking about this trade. We were in the middle of a range, 20 EMA confluence, running average demand on the weekly with a large ERC and a strong average demand made of 3 ERCs. So that is a valid entry. We shared this entry like a couple of weeks ago, and last week we were talking about this. Okay, and it is playing out nicely. Some of you are long on this one, which is great. Longs and new areas of demand. All this happening in the middle range with a 20 EMA confluence over there. Like I said in previous analysis, I'm not showing a 20 EMA because, one sec, where was it? Because I know when price is trending, I know where it is more or less, so I don't need to have it on my charts. I want to have a very clean chart without not even the 50% candlesticks. I know where they are, but I know many of you can be helped with the indicators. I just want to have my charts as clean and clear as possible. So this is a great setup that happened this week and others in the cross pairs. I just wanted to share with you. On the South African run, we have a very similar scenario, but it is a pity because price did not retrace to the level by a couple of ticks. So, unless this one is Oanda, maybe on your broker. Let me see. SAR, maybe, I don't know, IDC. Same thing, no retracement. FXCM, no retracement. No, it didn't retrace as expected. Okay, next one, the S&P. All the indexes have bullish bias. Monthly uptrend, weekly uptrend, weekly bullish confluences being created for longs and near areas of demand. That's what it is. Price did not retrace to this daily of demand. It created another one with only 1 ERC, long bias. Nasdaq, brand new every demand on the daily was created, bullish confluences. Monthly is in an uptrend and didn't draw that one. Consolidation way happened over there. Missed that one. Monthly uptrend, new every demand was created, tested, new one created over there, long bias. Dow Jones, monthly uptrend, weekly uptrend. It's a pity that this level did not score high. It's taking control. No sell and forget longs are possible. Russell, where we're expecting price to retrace this daily and weekly average demand, no retracement yet. Monthly and uptrend, the higher it rallies, the lower the probability for new areas of demand. DAX 30 German index, all-time highs and weekly and monthly area of supply were eliminated. Monthly uptrend, weekly uptrend, new areas of demand playing out. That one played out. That one is trying to play out. Long bias. FTSE, still room to reach the monthly average supply. We are expecting the elimination of those two areas of supply. That won't happen in a couple of days. It might have some reactions and all that, like on many other indexes. So right now, weekly and uptrend, longs and near average of demand aggressively counter trend against the monthly 3 months downtrend. Nikkei index, new average of demand being created on monthly and the weekly and daily, but no retracement. The Australian index, new area of demand created over there for longs aggressively into the monthly area of supply. We are expecting the elimination of those two imbalances on the monthly and 3 month timeframes. Hang Seng index, monthly and uptrend, this weak tested area of supply has been eliminated as expected and mentioned for months. Why? We had the 6 months uptrend with 6 month demand in control. New weekly average demand and new average demand on the daily stronger than the bearish supply zones. Nifty, monthly uptrend after eliminating that area of supply. That is exactly what we were expecting on the Nifty index, and it had happened already. So this one, the Nifty was faster doing that. Very strong rally. We need a bigger retracement. This daily average demand to control, try to play out. It's getting more and more aggressive to go long in this index. Bank Nifty, after a very strong rally, no close above, going long right now is not possible. Even though if we wanted to, we've got that daily area of demand. It's only made for 1 ERC. This one is stronger and it is nested within a weekly area of demand. No longs are out right now. The daily is out of alignment. We need weekly imbalances. 10-year notes, monthly in an uptrend, 3 months in an uptrend. We're expecting price to drop down there, where longs will be possible again. Right now, only counter trend shorts are possible if you are a counter trend trader. We've got that one playing out, no retracement, no retracement. Will that one play out? I don't know. Right now, the weekly price action is good for that. So let's see if it approaches too fast, then it's not a good idea to go short. Remember, this is a counter trend. Bitcoin, after such a strong rally, we need a bigger correction. Will Bitcoin retrace to this monthly average demand the same way that it did retrace to this one and this one? Nobody knows. This one area here, 3 months average demand, will be confirmed if we have this candle consolidating away. I'll draw it in advance, okay, so you could see it, but it is not valid yet until the end of March 2021. Tested area of demand, bigger penetration happened. We have room at least for the weekly area of demand. Gold, month is still in an uptrend, weekly downtrend, weekly area of supply almost fully penetrated. The daily is a real mess, the 4 hour is a real mess. Doing nothing on this one, long-term longs. We have the bullishing of the variance confluence for longs and areas of demand. Natural gas, 12 months, 6 months, 3 months, monthly average demand in control. Also this weekly average demand. Longs are weekly average demand. Brent, still room to reach the monthly area of supply, where shorts will be possible near areas of supply. In the meantime, longs counter-trends against the trend. Remember, this is against the monthly downtrend. Approaching that monthly area of supply and the nested area of supply in the 3 months. Going long is getting more and more aggressively, and I don't think price is going to just do it like that. It's going to react to those areas. The 6 months bullish pink candle, if we take a look at the 12 months, that's even more worrying for shorts. Okay, expecting that weekly area of supply to be eliminated. Aggressive counter trend longs. This one should be 6 months. And that's everything. Remember that if the assets are consolidating, it's very tricky to trade them. Imbalances can be created easily, but also they can easily be eliminated. As you can see, you have to pay attention to the last impulses. They have to consolidate away, and if you still want to go with it, then you will want strong nested imbalances and bigger time frame areas of imbalance in control. But as you could see in many of the examples, when the last impulses do not consolidate away, they are not holding at all. Sometimes they will, but remember that we should be trading a set of rules and not a set of exceptions. That's what I will always say. And that's everything, I believe. Enjoy the rest of the weekend, and bye-bye. Stay safe. Be happy. Bye-bye.